Hey, what's up, everybody? Greetings from New York City. New York, the epicenter of the coronavirus pandemic for the United States. Unfortunately, this is my new uniform. Go walking around in the streets like this. The new reality that we are facing. And President Trump said today if you're anyone traveling from New York to anywhere else, they got to self quarantine for 14 days. And by the way, the governor of Florida made that official. If you are coming to his state from New York, you got to self quarantine. So my state is officially uh, persona non grata, unwelcome, and I don't blame these other states. I was expecting this to happen. All right, let's talk about the markets. Big move today up. Was the biggest point move ever. It was the biggest percentage move since 1933. Question is, will it be sustained? Of course, it won't be sustained for any length of time because the economy is really going to crater. However, two things. Number one, a lot of this enthusiasm today was based on some hopeful signs in the stimulus bill process going on in Congress. It looks like they were getting closer, but I think, a lot of people were hoping to see that thing pass today. That didn't happen. So we can go right back down again. The other thing we could talk about is, and I don't even, in this environment, it's almost silly to talk about a technical condition, but, you know, the market is deeply, deeply oversold. If you look at things, like I've been putting out, the put call ratios, the 10-day average of the put call ratio, the 20-day average. These things are off the charts, man. They are off the freaking charts. So, if you're going to make a case about extreme panic, about extreme sentiment levels, extreme negativity, you have one right here. So the bounce is understandable. Underlying conditions obviously don't support the bounce or will not support the bounce for any length of time because the economy is really going to see a significant contraction. Hopefully we get that stimulus bill passed. It gets cash into people's hands. It helps businesses. Trump was also talking about getting the economy back, putting people back to work as soon as possible, maybe by April 19th. And there's a lot of controversy about that. Some people said, what? How could you send people back to work? That's just going to increase the spread of the virus and prolong the situation until, this thing kind of flattens out and peaks. And he's like, no, we can't do that. America was not created for this. We can't have a shutdown. The economic impact will be as devastating, if not more, to people's lives. So there's both sides to that. I have my own opinion. And gold, I want to talk about gold. We had a $100 rally today. Gold almost all the way back up to 1,700. By the way, my subscribers, we were buying at 1450. I think I said that on a video last week when the price traded down there. We were buyers at low 1500s. We were buyers again at 1450. An interesting development in the gold market. And by the way, this was pointed out to me a week, 10 days ago by one of my subscribers, actually talking to me about the lack of physical gold. That there was, you could almost say the gold market had the pricing function it just disappeared. It got messed up. If you were trying to buy physical gold on that correction down to 1450, there was none. So you had paper gold trading in the futures market at one price, and you literally had no available gold supply. So something weird is going on there. If you want to talk about gold, my interest in gold, which, by the way, I've never been a gold bug. I've never argued gold as money or all that stuff. I originally got long the gold market in 2015, December 2015, when the Fed first, reversed course on interest rates and started raising rates after that 9-year pause. As I said, rate hikes are price hikes. They're inflationary. I bought gold at $1,043 an ounce. That was the bottom. And I held on to that throughout the entire rate hike cycle. But also, one of the things I've been talking about with respect to gold was the actual supply-demand fundamentals of gold. That was another bullish argument, and a very powerful long-term bullish argument. It wasn't just an issue of monetary policy. It was also that there had been a 9-10 year period of a significant contraction in the level of capital investment in the mining industry. Like really no new mine supply, or very little new mine supply. And so the setup was there for a very powerful and sustained rally in gold. Like you didn't have in the gold market what you saw in the oil market when fracking came around. You didn't have the development of these new technologies and new supply discoveries. No, I mean, it just kind of like, and that became really apparent. And for those of you who've been following me for any length of time, back in 2018, I was talking about the mergers that were happening at that time in the mining industry, big mergers and acquisitions, where companies were finding it cheaper to acquire gold reserves through acquisition than through mining and exploration. And at the time, gold was like $1,150, $1,200 an ounce, and these acquisitions, they were saying, were justified. It was justifying a $1,400 price for gold, which obviously we blew right past there. But these guys in the mining industry, some big names, Gold Corp, I forget the others, but anyway, they were absolutely right, and they foresaw the shortages and the high cost of extracting or finding new reserves. So they were acquiring reserves by buying up companies. Another guy who got into the gold market, I believe it might have been 2018 as well. Maybe, I don't know if it was last year, 2018, was Sam Zell. Sam Zell is a billionaire. He's called a vulture investor in real estate. He's made his fortune, billions and billions, investing in distressed real estate. And that's really all he does, folks, is real estate. But back in 2018, I think it was 2018, it might have been early 2019. Back then, he said, I'm taking a shot in gold because the supply-demand situation just looks to me like extremely, extremely bullish. He said, I've never bought gold. I've never invested in gold. It's not my thing, but he said real estate prices were too high. He was looking around. He had cash, laying around. He was flush with cash. So he said, I'm going into gold. And when I saw that, like, this guy is a pure value investor. So there you had it. And now things are really looking like they're starting to, get kind of serious in terms of you have these price run-ups. And I mean, very interesting what's going on. Anyway, I think the market, if we get this stimulus bill passed and get cash into the economy, I think we can float here, especially since, if you think about it, that IRS tax filings, normally April 15th, have been pushed back to July. So normally that would have been a drain on household cash. People have to pay their taxes. That's not going to happen. So we can get a little rally here for a couple of months if we get the stimulus bill. If not, probably this thing goes right back down again. But I'm hopeful that we will. Market is very oversold. And we'll see what happens. All right, reporting to you from New York City. I'm still okay. Hunkered down. And following all my social distancing. All right, everybody. See you tomorrow. Have a good one. Bye-bye.